Hello and welcome back to CMG RS-based Forex lessons. This is a masterclass for Forex traders, right? Intermediate class on Candlestick Patterns, right? This is a series, a video series, and this is episode 11. So we are now on support and resistance levels, right? We have done quite a number of the videos, the episodes, right? So if this is the first time joining us, I recommend you watch the previous videos and then you can come back to this. So please like and share also. And if you have any problem, any question at all, you can write to us. Then we will get back to you. So now let's focus on today's agenda. So we are on support and resistance levels. Now, this is one of the factors of confluence, especially for intermediate trader or amateur, the beginner, right? We have done the video series is majorly or mainly on candlestick patterns. That is what we are doing. We are mastering that. And then we also look at what confluence. Look at the types of market structure and all that. So after seeing one factor, what do? You add that factor to another factor. You build some facts, right? Until you are convinced that you want to trade the market. So that is what this topic is about. So we are at support and resistance. So support and resistance are proven areas. They are actually areas or levels, right? Resistance and support, they are actual levels or areas where buyers and sellers find some equilibrium. They are major turning points in the market. So the equilibrium, what it means is that they are a point in the market where the seller's power, right, is equal to that of the buyers, right? So at that point, anything at all can happen, right? So there could be an opposite direction in that area. So that is what it means. So let's assume the market was or currently is an upward trend. When we get to these areas, the market could actually turn around and go in the opposite direction. So that is what it means. And now we do this with the help of some lines that we draw, horizontal lines on the charts. They are basically horizontal lines on the charts. Support and resistance levels are formed when price reverses and change direction. And price will often respect these support and resistance levels. In other words, they tend to contain price movement until, of course, price breaks through them, right? So what it means is that prices move to these areas, and then when they get there, we have something we call, in fact, technical analysis are basically based on price history. That's what it means. So at any point, wherever the previous prices got to before moving up or down, when the price get back to those levels, there could be some reactions. The price could actually has a higher tendency of respecting what happened in history. So that is the meaning, right? So the price will move to that area and then it will move back. So let's say, for instance, I'm just going to do a rough thing. We will have a better representation of that, right? So we have something like this channel, right? So price was moving this way, got to this level, then move down, move this way, got to level, and move down, right? So we realize that for history, right, the history, whatever happens here, the history or whatever happened in the past, when price actually gets to this point, it has a higher probability of respecting whatever happened in history, right? So when it gets here, it has a higher tendency of moving back. So that is what it means. It's as simple as that. So whatever happened in the past, when price gets to those areas in the market, it has a higher probability of respecting it. Some you hear the term, price is respecting that level, whether the support or the resistance. It is supporting what is, in fact, it is respecting those levels. So that is what it means. Now, usually the top line, with respect to the line that you draw, the two horizontal lines that you draw, the upper and the lower, the upper line is usually called what? The resistance level, right? Is the R. And then the down or the bottom line is what? The support level. So that is it. So when the price gets there, they are not able to what? Move past that, right? So the price is being respected or resisted or in fact rejected. In the same way, when it gets to the support line, price may respect it and then price will be rejected at these areas, right? So this is what we call support and resistance what level. So we are going to continue. Now in trading markets, support and resistance are formed from swing points, right? We have also learned in the previous video, we learned about the swing highs and the swing lows, the wicks. That is it. So that is what it means. That the topmost part of what? The wick or the candle is called what? The swing points, the high or the low, whatever it is. So that is it. Now in an uptrend, the previous swing points act as support level, right? So in an uptrend, right? So let's say a candle of this form just happened here, right? And maybe a swing high is here, right? The swing low may be here. That's what. So is that in an uptrend, the previous swing points act as support, right? Support level. And in a downtrend, the old swing points act as resistance, right? So the swing points, whether the low or the high, they act in both cases, right? So for the support level, they are acting as what? The swing low, the swing low, and then at the top line of the whatever the resistance, called what? The swing high, right? So this is a trend line actually. So let me better use I just want to remain as basic as it says. I don't want to go before as ahead of the class, right? So we just do the normal way. This is the support and then the resistance. This is the support and this is the resistance, right? So a candle can be this way, right? Or better, so get a short candlestick here, right? And then here, something of this sort will move on lines, right? So just as simple as that. So the top one is the what? The swing high, and then the down bottom is the swing low. So at this point, if it happens at the support level, the swing low, and then at the resistance level, the swing high. It's as simple as that. So let's have a better representation. So that is it. So let's look at this. Support and resistance, you do that with two lines, right? So at any point in time, you draw two lines, upper and lower. You look at that, then you can determine which one is the support and this is the resistance. So here we have the first one, that's the support line, right? The support. This is the support. Then when you move here, this is what? The resistance, right? So this could actually, in fact, could actually be resistance with reference to this first one, 1 and 2, this horizontal lines, right? So that is, so you can actually draw a line at any point at all on the chart, right? At any point or at any area on the chart, and then you identify if this is what the area that you want to actually study. Then you know this is your support or this is what your resistance levels. So that is it. So let's say this is our support and then this is our resistance. So price actually moves from here, gets here, and then move here. Is the support, the price has been respected here, right? It has been rejected and moves up again. So when it gets here, you realize that the price moved out of it. So the moment the price moves out of a line, maybe a horizontal resistance or support, that line initial purpose changes. So let's assume this, in fact, was a resistance. So now that the price has crossed over, it's no more a resistance again, but it has actually becomes our second support level. So that is it. It moves up. Even though it came back, it moves up again to this point. So now our new support and resistance is what? Support is our new support. And now this is what? Our new resistance. Our second resistance and our second what? Support. So that is what it means. Right? So we talked about what the swing point. This is it. The swing point of it, right? The swing point of it, where we have the wicks, right? The wicks supporting or rejecting. That's the swing points that we are talking about. This one also go to this particular one. What did it happen? It was rejected, moved here, back again. Move here. This is what happens here. The wick, the price is being what? Rejected again. So that's the swing point that we are talking about. If it's at the lower, if it's at the support level, it's a swing blue, and then if it's at the resistance level, it's a swing high. So, and this is what's happening in an uptrend. Don't forget that. This actually happened in an uptrend. So whatever you see here, the opposite is going to happen for the downtrend market. So that is it. So you take the market, you draw your lines, and that is it. Good. So even in an uptrend or a downtrend, you can still draw the support and resistance level. We also get to a point whereby you use what is called a trend lines. The trend lines are actually drawn in the diagonal form, right? They are drawn in the diagonal form. They are not drawn in a horizontal form like this, like you see these red lines. So when they are in the horizontal form, we call them support and resistance levels, right? That's the simple way. Now, when the market is in the slanted or moving upward or downward, you can also use something called the trend line, right? So instead of calling the trend lines as support, even though we can still call them support and resistance level, but the horizontal lines are the basic or the common way of referring to them as the support and the resistance. Those in the diagonal form, we call them the trend lines, even though you could also use them as the support and resistance level. Because let's say this one, if your price moves to this point and comes back, it has been rejected at this line, right? So this is our resistance. This is serving as a resistance, and this is also serving as our support. It gets here, it gets rejected. That is it. So this is as simple as that. Don't think too hard. Just take them as simple as they are, right? I just hope you understand this, because I think they are easy to understand. That is why I'm not talking too much or explaining too much, or I don't want to be too wordy, talking too much, using a lot of words to explain. It's as simple as that. The graphical representation is very easy to understand. So that is what an uptrend. So the illustration above shows how the previous swing points, right? The previous swing points acts as supports level after the breakout, right? No worry. Now, when the market makes the retracement move, it respects the previous swing point, the support level, right? Whatever we have said, it's just the reading that we are doing now. Going to represent the beginning of another impulsive move, right? So when the price moves past one level, that initial level, its name changes to become the opposite of the current name that it has. So if it was support, it will now be resistance, because the price has in fact, if it was a resistance and the price moves above it, the name now becomes wait, I think I'm getting confused. If, let's say, let me draw it again, right? So this is support and this is the resistance, right? So if price was here and now it moved past this resistance is no more called a resistance level, but it is now a support level. So that is what it means. In the same way, if price was moving down here, it got to this support and then it moves past it and never comes back again, this line is now what? A new resistance, right? A new resistance level. So it just opposite. Whatever name that you had initially will come what? The opposite of it, the current one. So that is what it means. Now, as you can see, when the market tests the previous swing point, that's the support level, it goes up again. Now, by drawing a support level in an uptrend, a support level, right, in an uptrend, we can predict when the next impulsive move will take place, right? Let's see another example of the downtrend. So that is it. Market is generally moving down. That's what it's doing now. It started from this end. Now it's moving down to this point. So that is what it means. So at this point, these are resistance, right? These are resistance, initial resistance. This is like our support. I can still call it a support, right? Because price was moving down this way. When it gets here, what does it do? It what? Move past it. So now that this one was initial support, it has now become a resistance level because price has what? Moved past it. So when it gets here to, price was not able to reject it. It tried, but in the end, it couldn't. So price moved down it again. So this support has now again become what? A resistance level. It got here, moved down again, it got to this point, right? So this is our support, because the price, we don't know what happened afterwards. After this picture or this chart, we don't know what happened afterwards. So that is it. It's as simple as that. So we get to a point that we actually draw the two lines, the support and resistance, then you understand it better. So our main point is to know the swing point, the low and then the high, the swing high and then swing low. That's what we are doing now. We are still using that to understand our resistance and support levels. That is it. Now, the illustration above shows us how the market respects resistance levels, right? When price approach previous swing points, as in here, swing point, resistance level, that is it. Now, the market makes an impulsive move. If you understand how price action acts in the trading market, you will predict with high accuracy when the next impulsive move begins. Another way to catch the beginning of an impulsive move is by drawing trend lines, like I said. In the same way we use the support, the horizontal lines, the support and resistance level, we can actually use what? The slopey ones, right? To also identify our support and resistance level. That is what we were talking about. Now, this is another technical skill that you have to learn if you want to identify key linear support and resistance level. Let me explain to you first what to do. Let me explain to you first what trend lines mean. So that is it, don't worry. I think it's a grammatical error. Quite often, when the market is on the move, making new swing highs and lows, price will tend to respect a linear level, which is identified as a trend line, right? Bullish markets will tend to create a linear support level, right? Bullish one, as the prices are moving up, they will tend to create a linear support. It's a linear, moving in that straight line, linear support level. And the bearish market will form a linear resistance level, right? So that is what also mean. This is a linear resistance level. This is what a linear support level. So in the sloping form, we call them trend lines. Yet they are also used as what? Our support and resistance level. That is as simple as that. Now, let's end here and then let's continue in the next episode. Now, I don't want to do take too much time in one video. We want to have them in chunks so that it will be easy for us to understand this video series. So thank you very much for staying with us. Please like and subscribe to our channel. We also provide private lessons. So when you contact us, we'll get back to you. So thank you very much at all. See you in the next episode. Bye.